Hello everybody, this is Sabyasachi Paul from Eastern Finances Limited, and today I wanted to discuss about the Indian stock markets, the way it has moved up in the last couple of months by around 12 to 13% from lows of around 15,700 odd Nifty levels to around 17,800, 17,900 odd Nifty levels. So, now although Nifty is range bound between around 17,400 on the lower side, 17,900, I feel that we need to be a bit cautious as far as the Indian stock markets are concerned. Now, if you look at economic data, we will see that India is still significantly better off as compared to the rest of the world. Now, GDP growth over here is still expected to be around 7%, and inflation is also more or less under control, around 6 to 7%. And the interesting thing is, it has a declining trend over the last few months. But I think in India we cannot be decoupled against the rest of the world, and whatever is happening globally, that is bound to have some rub-off effect on India. Now, if we see, Brent crude oil has come down to around $88 per barrel, and from around 120 odd dollars per barrel at its peak. So I think my sense is that crude will fall further over the next couple of months because of the global slowdown that is happening currently. I mean, although winters are coming maybe in December, January, in Europe and UK. But till then, my sense is that because of the slowdown, crude oil will actually come down further. We see the sterling dropped by about 4.5% against the greenback in August, and it continues to slide. The UK inflation hit 10.1% in July, and the Bank of England has projected that it will peak at around 13.3%. So there's still more pain left as far as UK is concerned. Uh, Now, if we see that inflation uh, has hit a high of about 9.1% in countries which use euro as their currency. This is the highest since the euro came into being in 1997. And as per the latest reports, the ECB is projecting inflation to go up to about 8.1% this year on an average, and 5.5% in 2023. And this is significantly above what they have been historically, around 1 to 2%. So if we see, energy prices have surged by about 38% uh, over the last 1 month, and gas prices continue to rise as Russia extends shutdown of their Nord Stream 1 pipeline, which supplies gas to the European countries. The euro has fallen to about 99 US cents, which is the lowest in the last 2 decades. And the ECB has just announced, that they have taken a 75 basis points rate hike, and this is something which is unimaginable or unthinkable even 6 months back, because I think the energy crisis in Europe uh, is just aggravating the matter even further. And if we see, because of all these currencies, be it the pound, be it the euro, the dollar index has surged to a 2 decade high of about 110. So most global currencies continue to depreciate against the US dollar. Now, what is happening is that a strong dollar, inflation, tight labor market, and supply chain issues have also played havoc with the cost of technology funds in the USA, because again tech firms in US, they would be large exporters to the rest of the world, and I think this situation is hurting them very badly. So, a recession looks imminent, and if we just go by the comments of the Fed chief Jerome Powell at the annual meeting of the central bankers in Jackson Hole, he says that he's clearly focused on bringing down inflation down to 2% at any cost by taking further rate hikes. So more rate hikes are on the anvil going ahead, and with such sharp rate hikes, there is bound to be some slowdown. So even now, there is every possibility of some kind of recession going ahead, which we need to be cautious about. And very high energy costs with recession, I think this will have some negative impact on crude, on silver, and there are slowdown fears globally. But I think in this situation, what should one do? I think clearly focus on domestic stocks in India. I think we are having an above normal monsoon, so rural growth should be intact. So I think India is significantly better off as far as inflation and interest rates are concerned, and it's still within a certain comfort zone as far as historical levels are concerned in India. But I think at the end of the day, we cannot remain decoupled from the rest of the world. So I think we should be uh, cautious as far as investing heavily in the stock markets at these levels. Because I think there is every possibility that there is some correction going ahead. Thank you.